this conference. And please allow me to get the routine of the World Bank Group necessarily. So to begin, I'd like to share a specific moment that was crucial in making me decide to pursue the path that I have. I was an A-level student then, scouring through videos on YouTube, and I chanced upon the video entitled Breaking the Wall of Poverty by Mohamad Yunus, Nobel Peace Laureate of 2006. Some of you might know him, some might not, from Grameen Bank Microfinance, founding father of microfinance. Albeit lasting less than 20 minutes, and I would recommend all of you to watch this video. It profoundly impacted me. Part of his speech that struck me to the core was on how the current financial system seemed to turn the multi-dimensional human being to a one-dimensional, self-centric, putting money above all being. It was fascinating to know that the model he used for Grameen Bank was paradoxical to the conventional bank's model. They ask for no collateral, they target the poor, and they focus on villages. So it led me to read the book Poor Economics by Abhijit Banerjee, Esther Duflo, professors of mine. I didn't take their classes, but I saw them in the hallways of MIT, which to me was an absolute masterpiece and cemented the hope for me to one day work in development finance. But of course, over the years, I learned more about the traditional financial system, the more I understood the severity of one of the main issues forwarded within the book I just mentioned, and that is the creation of an economic identity via access to a bank account. While the models of Grameen's microloans and M-Pesa's mobile wallets are fascinating and have created significant contributions towards addressing the gaps left by the current system, it still does not provide access to mainstream financial services. And when one does not have access to a bank account, there is no real mechanism to verify one's creditworthiness, and thus the poor are deemed too risky and are forced to pay the highest interest rates when they are the very people who require the services the most. A few percentage points may mean the difference between deciding to take a loan and sending their kids to school, which probably has arguably the highest probability of changing the future of the family, or just deciding to to have the child work for the family farm and forego education altogether. And that is where my interest in blockchain began, knowing that there is a much cheaper, faster, and more accessible system that can address this market inefficiency. And since the creation of a wallet simply requires access to the internet, the trend of internet penetration rate, which far exceeds the current growth rate of bank account registration, is a wave that should be ridden to leapfrog the current operational limitations of setting up a bank account. The fact that Southeast Asia still has 300 million people who are unbanked and internet penetration annual growth rates averaging 25–30%, one of the fastest in the world, should suffice to show how huge an opportunity this is. I'm sure many of you would have heard of blockchain firms currently working specifically in the space of financial inclusion, including Omizego, Humanic. But the one I was particularly attracted to when reading the white paper was WeTrust. Essentially, they're working on building an alternate credit score for its users via the creation of a trusted lending circle on the blockchain, also called Hui, Susu, Tanda, and in Malaysia, Duit Kutu. An example would be 4 friends paying $25 a month, and one person within the group getting that $100 by turn. It's simply a collective effort to incentivize saving to make a larger than usual purchase. A very simple concept. But what is important here is that by doing this on the blockchain, you can actually trace these people's savings and spending behavior and begin to create the aforementioned alternative credit score. By first starting with a group of family and friends, the risk of default will be much lower since the repercussion is more than just a contractual feud with the bank. You are actually risking your relationship with your friends and family. So once a reliable enough credit score is built between people who know one another, you can start matching people who don't know one another, who have pretty good ratings. And by this, we have just created a pseudo bank with saving and credit granting capabilities. The benefits of financial inclusion that can be fostered by such a mechanism is immense. The creation of economic identity, as mentioned by one of the speakers before, remittance services between family members who live in separate countries, and access to financial services for refugees who have lost crucial documents and thus unable to create a formal bank account. However, the current issue with such offerings by these companies I've just mentioned mainly stem from three main issues, I believe. So legitimacy, reach, and price volatility of the tokens used on the platform. Poor people will find it much harder to trust private players, part of a system which have consistently been marginalizing them. And if we're talking about reaching 300 million unbanked people in Southeast Asia or 2 billion globally, we're talking about a lot of resources, which many of the current players simply do not have yet. And considering the purpose of the system is to bank the unbanked, these uncertainties which come from price volatility is massive deterrent from adoption. But all these issues can be addressed, at least in part, by the participation of the government itself. While I understand that most governments are currently still looking pretty much only from the regulatory aspect for the time being, I believe too much attention has been diverted to specific cryptocurrencies, which is not at all the focus in this case. We're talking simply of a market inefficiency which is unaddressed by the current system and which directly concerns the economic well-being of people who need it most. And I believe that is enough to at least merit a proper consideration, an initial consideration by governments. And that leads me to the second part included in the title of my talk, which is government-issued infrastructure financing. Or another way to look at it, mini social bonds issued on the blockchain. And yeah, I did not know personally, the previous speaker mentioned that World Bank just issued, I've been on leave for the past 2 weeks, so I suppose I did not realize they just issued a bond on the blockchain. But that's good to know. I realize that time does not permit me to delve too deep into this idea, but I'll try to give at least a short overview of the concept, and to those interested, we can take the discussion off stage. At the moment, the access to sophisticated instruments such as bonds are limited to institutions and people with considerable net worths. This is mainly so due to the issue of divisibility of these instruments, whereby the smallest denomination is usually in the region of $100,000, far out of reach of the masses. When clearing and settlements can be as cheap as a few cents, within a duration of minutes or even seconds instead of the current 2-3 days, much smaller denominations can be issued, for example, 100 ringgit, and inclusivity and liquidity could be massively amplified. People who have always instead chose to put their money, liquid money, in the form of cash at home or in their checking savings account can now instead invest in these social bonds, which enable them to share in the development of, for example, in the development of causes, projects closest to their hearts. And the combination of fast, cheap transactions combined with investing in bonds for the development, for example, of a bridge that one has hoped to be built in their villages, would make a much stronger case for adoption of blockchain wallets than, say, a cryptocurrency whose project and business model they may find extremely difficult to understand and have no idea if their investment will be secure from theft or hacking. And that leads to another important part to make this work, which is the equivalent of a deposit insurance in banks and a guarantee of liquidity should people want to sell these mini bonds. As we all know, the issue of custody is a huge one in the space, and many people and institutions will simply not participate unless they have a guarantee that their holdings are securely stored and that they will be protected from any potential theft that might occur. But coming from an institution where guarantees and liquidity for bespoke financial products is a major part of our service, I don't see why a mutually beneficial deal cannot be made. While the creation of a national tabung in Malaysia to help alleviate the current debt is admirable conceptually, I believe allowing the people to actually participate more formally via the purchase of these so-called mini social or infrastructure bonds would prove much more practical and encourage people's active participation in the rebuilding of this country. To close, I hope that some of these examples I have given have helped to elucidate the potential applications of blockchain which may not have received as much attention relative to the other aspects of the space. and that the dream of ending extreme poverty and boosting shared prosperity can and will be realized. With that, I thank you.